Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, investor fascination with the possibility China may back off its strict lockdown regime doesn't seem to be reciprocated by official announcements yet. In China, exports fell in October, their first retreat since May 2020, and prior to that, January 2019. The fall wasn't large, but over the past 2 years it is well lower than the prior low of a 3.5% year-on-year rise. And China's October 2022 trade surplus was lower too, at $85 billion, and well below the $96 billion expected. And Apple has warned it will ship fewer premium iPhones and customers will face longer waits for products after their strict COVID-19 curbs disrupted production at a key Chinese factory, which is operating at significantly lower capacity these days. Analysts had expected China's foreign currency reserves to dip marginally in October by about $18 billion, but in fact they rose marginally by $23 billion to $3.05 trillion. Those rumours continue to swirl about a coming easing of pandemic controls. It is seducing investors. But news of a wider spread of infection, especially in the Guangdong region, remains a real public health and economic worry. In the US, a detail from the strong October jobs report is worth noting. Logistics firms shrank their workforce by 20,000 people. This is a sign that supply chain stresses are easing faster than expected, and the great employment run-up during that period may be over. But it is an industry with a very much larger jobs footprint now. In Europe, German industrial production rose in September from August, and by more than expected, and is now 2.6% higher than year-ago levels. But you may recall we've already reported that new order levels are not rising. International air travel made a strong recovery in September, including in the Asia-Pacific region, but it is still down by 50% from equivalent pre-pandemic levels. Only North America is almost back to those benchmark levels. On the air cargo front, the situation is closer to normal volumes, but the Asia-Pacific region is dragging still. Again, it is strong North American air cargo markets that is driving this recovery. The US Treasury 10-year yield starts today at 4.21% and up 5 basis points from this time yesterday. And the price of gold will open today at $1,678 an ounce. That's down $5. And oil prices start today marginally firmer than this time yesterday at just on $92 a barrel, while the international Brent price is now $98.50 a barrel. And the Kiwi dollar will open today at 59.2 US cents, a little change since this time yesterday. Against the Australian dollar, we stayed firm at 91.6 Australian cents. Against the euro, we're down slightly to 59.3 euro cents. That all means our trade-weighted index starts today at 69.5 and 20 basis points lower. Get more news affecting the economy in New Zealand from interest.co.nz.